Hi traders and welcome to the Friday Market Watch on the 7th of October. So we find ourselves on a non-farm payroll Friday, which has come around fairly quickly this time. But look, we've had a very active week, and although today might be a little bit quiet, the week has certainly been very, very busy on the key indices and some of the majors that we look at. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD, and look, this is doing its very, very best attempt at trying to break lower. There's no question about that. We can see that we've got some very, very big range candles that have happened this week, and this last one's no exception. Like, we've been basically in the range that, you know, really formed the start of last week, really, and towards the end. So you can see here that we did hit the 65.25, and we've gone as low as 63. Well, we've actually gone, I mean, this week we've gone as low as 63.93. So we've certainly had a reasonable amount of range, but it is definitely consolidating inside this channel. There's no question this is the channel now, but it is pressing the bottom of it, which generally is a bit of a concern. Look, I wouldn't be acting on this one until we effectively get the non-farm payroll numbers out and see what the US dollar does. We'll look at the index a little bit later, and we'll see that it is obviously starting to strengthen again. But you know, if that does start to strengthen, this is probably not going to hold at this level here. You can see that it's really trying to bear down on it. And each of these candles, it's been a very confused market, because you can see we've got very, very big ranges on nearly all of the candles. It's not like we've had very quiet days. They haven't. So these doji candles indicate that the price was up and down at the extreme levels nearly for the entire day, but actually finished at the same point where it started. That's what basically a doji candle tells us. So although they haven't got big range, they do tell us that there was still a lot of action in that period. So for a non-farm payroll week, it's been really busy. So in this regard, what I prefer to do in these sorts of situations is effectively draw the channel that we know we've obviously got. You can see now that we've been able to get that channel in place, and it's a very even one actually, and very, very full. Not a lot of white noise here, which means that the candles are really filling out the channel nicely. It's not really just, it's bouncing from one to the other, but basically in a whole day. If you want to scalp it, you need to go to the smaller time frames and look for opportunities to actually trade inside it. Now, as you can see, with the channel, it was already established well before the last candle, right? So this is only the last day's trading that you can see. But as you can see, all of the hallmarks of what we look for in technical analysis are there for us to trade. We've got the series of lower highs and lowers, a 15-minute chart. We've got tests of the 20-moving average, tests of the 20-moving average again, and you can see that all the way down, you're able to trade it from the top of that channel all the way down to the bottom using the normal technical analysis techniques that we know and love. So realistically, you didn't have too many reasons not to actually short that, given that we were actually getting all of the range was already predefined. Again, you could have, even though I've only drawn this now, it wasn't this last candle that had this channel formed. You can see that we've been in it for several days, pretty much 2 and a bit weeks. So that's the way I like to trade a market that's probably in a consolidation zone, but could break out either side, because really a break above this channel tells us that we're probably going up to the 66.80, 67 again, which is a reasonable expectation. But a break lower, of course, and it spells a reasonable move down. So one to definitely watch, not one to preempt, of course, because like I said, each candle is being replaced by one positive in the other direction, but you can certainly scalp inside that range. So we scalp until we find a break above 65, the 65.50 level would be fine, or a break below 63.80. A daily break below or above those levels, and then we start to go in the direction of that trend. But good trading on the Aussie. All right, we'll move over to the US dollar CAD. And the US dollar CAD has, again, found itself inside this. It's really pushing high. You can see it's pushing up. 137.50 is the current level. It's back inside the channel that it did do. It broke down for a little bit, but it effectively got replaced by a green candle that completely, not quite engulfed the red one in front of it, but the range was considerably higher. You can see the wick was way up here at 137. So the range of that candle was quite a bit big, or quite a bit bigger than the previous one. That is generally a pretty good sign, but this candle here was your telling factor. Once we actually got into this candle here and it opened and started to push higher, that was our cue to go. And it was only scalping. Like, I'm still only thinking scalping opportunities on these ones at the moment, because we haven't got a clear and defined breakthrough direction. But that could be certainly coming. I mean, it did attempt to go short and couldn't even reach a 20-moving average before it turned around. So if you're going to be looking at long opportunities on the CAD, realistically, the high here at 138 is probably where you're going to be looking for your targets initially. Again, very similar to the Aussie in a sense that it is range bound to an extent. If you're going to scalp it, you go down to the smaller time frames and identify opportunities up to the 138 in the first instance and down to the 136. But a daily break above 138.30 here, which is probably the absolute mark, and a daily break. Now we'd have to go actually a daily break below the 135, a daily break below the 135, and probably more importantly, the 20 moving average, and we start to target the lower end. But I think that at this point, we're really wanting to scalp inside this zone until we get a clear and defined breakout out of this level. And I wouldn't imagine that's going to be today before non-farm payrolls. All right, over to the US dollar yen. This one is an interesting one as well. This has been playing the game really nicely as well. Obviously, like we've been pretty blessed with the ranges that this one has given us. It is absolutely trying to break free of this level now. Like you can see, we have been range bound as well, but this one really held its own. Like it hasn't really been too aggressive. You can see it's been in a very, very tight range here between the 20 moving average and the levels that we're talking about at around that 145. It's trying to absolutely break through. If we get a daily close, for me to be convinced about this, it really wants to close above the previous wick. So above the 145.80 area is where I'd be targeting this one. If we get a daily close above that, I know it looks a little bit extreme, but it's already done it, and it did reject it. I know that was on a bit of news, but I always respect those levels. I'm going to pay a lot of attention now that we're getting a daily close above this level here. But if we get a close above 145.80, we're going to have to look at the next real level, which is potentially up at 148.50 and 149. So, and that's a reasonable move, and that's why it's worth waiting for, because realistically, it's been consolidating and coiling for quite some time now. The 20 moving average has held it at bay. It's been tight and it's been congested, and when these do break out, they often break out quite aggressively. So this has held up where others haven't. And if the dollar strength really starts to increase now, you could really see this start to move. So keep a very, very close eye on this one. If failing that, if we get a break below the 20 moving average on a daily, which it hasn't happened in quite some time, then we can start to target the high 139 to 140 area. But that's still quite a bit away, and realistically, quite a bit of market action has to happen before we even get a series of lower highs and lower lows to that effect. But I wouldn't even be paying attention on that until we get a daily close below the 20 moving average, which will be 143.80, and a close above the 145.80 here on the daily. We'll look for really, really good long opportunities next week. So really good one. But the scalping has been very, very tight. The range has been very, very tight on this one over the last few weeks. But it looks like it's really wanting to move out. All right, we'll go over to the dollar index now. And this one found the support at the roll reversal zone. Pretty straightforward trading, really. The 20 wasn't quite able to catch it, but that's not unusual for the dollar index. You can see that we often do get below the 20 moving average before it does turn around. And that's just a consequence of what it is. It is driven by quite a few factors. But the roll reversal certainly did catch it, and that's the one we pay the most attention to anyway. So you can see the roll reversal zone I'm talking to is this level here, which is the 110. You can see that it pulled back to the 110, reversed off it, and now it's trading above the 20 moving average again. Look, it's one of those ones where this is waiting for non-farm payroll numbers as well, okay? Just like the indices are. We're going to have a look at that in a sec. But realistically, we found support where we needed to find support. If we were targeting that roll reversal area, if we were shorting this or longing the euro is what you'd effectively be doing, this was the level we would be aiming for. Has reversed now and is pushed above the 20 moving average, but this is more than likely going to hover here until we get our non-farm payroll numbers to see if they're good or bad for the market. We'll go over to the Euro USD, and it looks same deal here. This is one that did push past the 20 moving average, but it's certainly hit a roll reversal zone, as you can see right there. I'll put the line there for us, and you can see that it was support through there. It was resistance, 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 and it found resistance there again, nearly at the 50 moving average, roll reversal zone. And of course, it coincides most importantly with dollar index levels as well, which is obviously a big player and a big influencer of what the euro is going to do. It must do, because it makes up such a big part of it. In my mind, though, we must be very, very, very careful to realize that even though people want to long the euro from where it is, we are still in a dead set downtrend and have been for a very long time. On a daily chart, we're still making lower highs and lower lows, have been for a long time. That has not changed. This price action here has not changed that. All it's done is pushed up to a roll reversal zone. So until we get a series of higher highs and higher lows, and that may come. I mean, all it's got to do is actually reverse from here and make a new high on the daily, and then we've got our higher high, higher low sequence. But until it actually does that, We're not really looking for long opportunities for, any significant time. Really, we could scalp it. There's no worries about that to certain levels, but we've really got to be mindful that this is still trending down on the bigger time frame. So we've got to be very, very mindful of that. And again, the dollar index looks like it wants to go higher. And if it does, of course, this is going to send the euro lower. We've got a predefined target, though, of course. If we do get lower, we know what we're aiming for, the 95.80 in the first instance. That makes a pretty easy trading zone. If the dollar index breaks higher and starts to really move, this is going to be a pretty good target for the Euro USD. Failing that, of course, if it does turn around and closes higher above this level here, it needs to close above the parity level for mine now. If it does get a close above the 50 moving average and the dollar flat, then we can start to target longs and start to look for the 102.50 again. But either side, though, the daily has to close in that direction. But at the moment, it's looking weaker than it is stronger. But again, don't expect too much movement from this in today's trading in the Australian market and the Asian market until we get non-farm payrolls. Then next week, we'll set the tone for which way we're going to break out. All right, the last one we'll have a look at is the US 500, of course, and all important levels touched again. I love this one because it's just so technical at the moment. I know people think we're in a very confused and aggressive market, but really this one's been playing in the game for so long now, and we've been able to get all the technicals that we need to. All the levels hold up. Well, they have held up over the last few months, and it's been very easy trading in my mind. Obviously, we're still in a downtrend. I know we've had an exciting week. We've seen a big push up, but again, similar to the euro, we're still in a dead set downtrend. You got a series of lower highs and lower lows on the daily, and really you take that out to a weekly, and it's even more prevalent. You can see that, nothing has changed here. We're still in a downtrend. Okay, so we found support at the 200, yes, but we are still seeing a series of lower highs and lower lows. So you've got to really be mindful of that when you are trading it. Again, this is more than likely going to be a flat zone for the next 12 hours or so. It hit the 20 moving average. If you were targeting the long from the big resurgence over here, the 20 moving average was always going to be your target. Roll reversal zone as well. As you can see, we've got support here, two big levels of support base. Found it there, touched the 20 moving average, and then came down to the 37.50. It's still only scalping. It's only a sort of 50 or 60 pip range that you're talking about, really, to be able to get involved in it. But that could change very, very quickly once we get the new non-farm payroll numbers out. If it's a good result for the market, and it doesn't necessarily mean a good job number, if we do get that, a close above the 20 moving average, and it's going to be party time for the long. And if it does that, we're going to start targeting the 39 and 4,000 levels again. That will be the catalyst for next week. If indeed the numbers are ordinary, and ordinary for the market, that is, you're going to see a continued sell-off, and then we're going to start probably pushing to the lows in the first instance down to 36.50, then failing that, the new lows, or the new recent lows of around the 35.70. So it's an absolute guess as to which way it's going to go at the moment, because of course we can't foresee the number, but it's going to be very, very relevant. This is a very, very important number because it is a very important inflationary number in terms of how the inflation number is actually tracking, and where it may be the next time they look at it. So it's a very, very important non-farm payrolls tonight, to say the least. Okay, so a daily close above the 20 moving average. We'll know tomorrow morning if it's closed above the 20 moving average. It's happy days for next week, and we start to push long and look for long opportunities into the higher 39, 39.50, 4,000. Pretty straightforward. If we're down here or lower below 37.50, then we're probably going to start tracking down, and that 20 moving average will do its job, and we'll probably start pushing to the lows again around the 36.50. So we'll wait and see what happens there, and hopefully we'll get some good movement next week. So thanks everyone for joining us. Hopefully you had a great week's trading. We had some really, really good trading opportunities, and have a great weekend, and I'll see you all next week.